Alright, so let me show you exactly what this indicator does because it honestly saves a ton of time. Normally, if you're doing supply and demand trading, you know the drill. You spend hours trying to manually mark zones, right? But this indicator, it literally just finds the supply and demand zones for you and plot the areas right on your chart. You don't have to second guess or redraw. Now take a look at here with me on this BNB chart, 15-minute time frame. You can see right away there's a clear resistance area that the indicator has picked up. Notice how the price candles a few times try to push through the zone, but every single time they fail to break it. That's the key. The indicator is watching this for you. And here's what makes it powerful. The indicator doesn't just highlight the zone and leave you guessing. It actually waits for those breakouts moments. So instead of you jumping in early or forcing trades, it signals when the market finally breaks through one of these supply and demand zones. That way you're trading with confirmation instead of prediction. Now watch what happens right here. Price finally pushes above the resistance zone and immediately the indicator plots a break signal, literally right below the breakout candle. That's a super clear visual cue. And in this situation, the break signal could line up a strong potential entry for a buy trade. And it works the other way too. Check out this on the same BNB chart. This time the indicator identifies a solid support level. Price comes down and eventually the market breaks straight through the support zone. As soon as that happens, the indicator plots a break signal again, this time pointing a great potential sell trade. So you're getting it both ways, breakouts above resistance for buys and breakdowns below support for sell. Now you're probably wondering, okay, that looks great, but what is this indicator actually called and how do you set it up properly so it's tuned for accurate signals? I'll get into that in just a second, but before I show you, let me give you a little trick that makes the whole strategy even more accurate. So do me a quick favor, hit that like button and let's add one more tool to the chart. It's super simple. We're gonna add the 9, 20, 50 and 200 EMAs indicator. Don't worry, I'll explain exactly how we're using it. Alright, so once you drop the EMAs on your chart, it's gonna look a little messy. No problem, let's clean it up. Head to the indicator settings and uncheck the first two EMAs. That's the 9 and 20 EMAs. We don't need them for the setup. Now we're just left with the 50 EMA and the 200 EMA, which is all we need. Next step, make sure those two lines are easy to see on your chart. I usually thicken them up or change the color so they stand out more clearly. You want them visible because we're gonna use them for trend confirmation. Here's how it works. If the 50 EMA is above the 200 EMA and the price itself is trading above both of those lines, that's an uptrend. It's your confirmation that the overall momentum is bullish. On the flip side, if the 50 EMA is below the 200 EMA and the prices are staying below both lines, that's a downtrend. Simple, but it added a really important layer of confirmation, so you're trading with the market and not against it. Alright, so now let's get back to the first indicator and talk about the setup. The name of the indicator is called Flux Charts MTF Supply and Demand Zones. If you want to add it, I've left a link for you down in the description and pinned comment, so it's super easy to grab. Once you added it to your chart, you're gonna do a quick settings adjustments. Open up the Impulse tab and you'll see a bunch of options. The main thing I recommend is disabling the retest signal. You don't really need it for this strategy. Instead, keep only the break signal enabled. That's it. Honestly, the default settings are solid and work really well, so you don't need to overcomplicate anything here. Now let's bring this all together and actually lay out the rules for trading with this setup. Let's start with the buy trades. Remember the example earlier when the price breaks above the resistance zones? That's the kind of situation we're looking for. So here are the exact conditions. First, the Flux Charts indicator plots a resistance zone and price eventually breaks above it. The moment that happens, the indicator will plot a break signal. At the same time, you want to check your EMAs. If the 50 EMA is above the 200 EMA and the price is trading above both lines, that's your trend confirmation. With those conditions line up, that's a valid buy trade setup. Now, for your stop loss, you're not just placing it randomly. You're gonna use the most recent swing low as your stop loss level. That keeps your risk measured and logical. For the take profit, you're aiming for 1 to 2 risk to reward ratio. So basically, whatever you're risking on the stop, you're looking for double that on the profit target. That way you keep the math on your side even if not every trade works out. Now what about sell trades? The rules are basically the mirror opposite, but let me walk you through it quickly. First, the indicator plots a support zone. Price eventually breaks below it and you get a break signal plotted on the chart. At the same time, check for the EMAs. If the 50 EMA is below 200 EMA and the price is trading below both, that confirms the downtrend. That's when you consider entering the sell trade. Again, set your stop loss at the recent swing high and your take profit follows the same 1 to 2 risk to reward ratio approach. And that's it. Happy trading!